One of the factors that we've been watching very closely has been crude oil. It's been on the boil in the recent past, and in fact, it's trading comfortably above the $80 per barrel mark at this juncture. Brent crude at over 83, in fact. Let's listen in to Feridun Fisheraki's prognosis as to what will define gas prices and crude over the course of the next few quarters. Listen in.
It is, I think, some movement on the OPEC side can make the prices go down a little bit lower. On the gas issue, the problem is different. The biggest problem in the gas side is in Europe. And in Europe, we have a carbon tax. I mean, in Asia, in India, we don't have a carbon tax. The carbon tax is very high, $75 a ton. And that carbon tax is forcing coal to gas switching. Anybody who has any coal, pushing to gas. So that means that for the next 3-4 years, gas prices will be high in Europe, and the gas prices in Europe are closely linked to Asian spot prices called JKM, Japan-Korea market. And so I think for the next 3-4 years, gas prices will be higher than the oil index prices. I don't think at these levels of $30 a million BTU, maybe $15, $17, but it's still quite significant numbers, putting great pressure on the industry because heavily driven by the carbon pricing in the Europe. So EU carbon prices changing the global gas price.
And joining us now to talk more about the commodities market at large with a special focus on crude oil prices being on the boil is Jonathan Barratt, who's joining us live right here. Good morning, Jonathan. Where do you stand when it comes to crude being on the boil? You've got Brent hovering at $84 a barrel. WTI is flirting with $80 to a barrel. Just look at what natural gas is doing. And, you know, we're heading into the winter season. Should we brace ourselves for a $100 price? Or do you think this is the new normal, 80 to 85?
Well, I think that there is a supply crunch happening at the moment. We know that. We know there's a restriction in natural gas going into Europe, and that's going to be hard coming into winter. We also know that a lot of electricity producers are switching from natural gas to oil, and that's seen a draw of an additional 500,000 barrels a day. So I think whilst we see this crunch in the moment in supply of energy, we can expect prices to move up unless we see some of the levers start to open up. More supply out of OPEC. Remember, OPEC have decided that they'll give us more oil, more supply out of the Gulf of Mexico, but we need to see more supply now, or we've got to brace ourselves for higher prices over the winter months.
But, Jonathan, the point is that we knew what was going to happen with fracking, right, in the United States, because that had been part of Joe Biden's campaign, and it was one of the first few measures he took as U.S. president. So if we were going to see more production come in outside of the OPEC Plus, wouldn't that have happened already? And therefore, once again, should we prepare ourselves for $100?
Look, I think you're right. Biden is looking for supply like everyone else is, just like OPEC is looking to supply. Everyone understands as the price goes up, more frackers come online, more wells become there. So it is a timing lag that is the issue. So we will see more supply, but the question is how long will it take before we get that supply? At the moment, prices remain strong. Natural gas remains strong after its correction. So I would see a lift in natural gas prices as we head into winter, and that will probably drag up oil. If it gets to 100, I think that is a major concern for recoveries. I'm hoping that OPEC will step up and put more supply. They have pledged 400,000 barrels increase, but I think at these levels you'll find that OPEC will help out the global economy and come in with more supply. So hopefully not $100.
Relief, Jonathan, the expectation that it hopefully won't hit $100 per barrel. But can you talk about what you're witnessing from China? Because I think to a certain extent, a lot of what is happening, what is roiling commodity markets right now is emanating from China. What factors, according to you, are things that could potentially get resolved in the near term and perhaps to a certain extent will bring a little bit of stability to the commodity markets?
Yeah. Look, I think there are issues in China. We obviously have it with Evergrande, which remains a focus. Obviously where there's smoke, there's fire. We think that and feel that Evergrande will be a managed implosion. We think that it's too big, but China will take it to task in terms of the company just expanding and doing too much work in the market and creating exposure. We have seen some of the commodities come under pressure a lot. Iron ore and the likes as a result of that, steel markets. We also understand that China is looking to create that clean air for the Winter Olympics, so productions come back there a little bit. So I think China is doing its part to alleviate the crunch in some of the commodities or the fall in some of the commodities. But when it comes down to the energy, I think it's more an increased use of those economies that rely on oil aiding this crunch that we're seeing. So I think the crunch is mainly in the energy. That is a factor of a few things we've already discussed and emerging economies from the pandemic. But on some commodities, we're seeing them under pressure due to the overlag of the Evergrande situation in China, which is a huge thing in terms of how some of our commodities, such as iron ore, actually work.
Then, and talking about various commodities, supply side issues has been what a lot of people have talked about in the commodity space, and that's the reason why you're seeing this kind of disruption, if you can call it that. Do you see some of this easing, particularly if you're talking about things like natural gas, if you're talking about areas like Russia? Do you see that easing somewhat over the course of the next couple of months, or is this something that we witness going into next year?
Yeah, well, there are two things that I think are very important. First, shipping costs. Shipping costs are extremely high. And when you come to the supply of natural gas, I'm still trying to work out why Russia has inhibited its supply of natural gas to Europe, which I think will be quite an interesting thing if we can understand the reason. Germany is at major lows in terms of its supply, of natural gas, and also it's a store of natural gas. So I think it just really needs to understand why Russia is holding this back. And why they're not allowing that supply coming into Europe. So I think that's a key point. But as I said, the supply is there, the commodity is there. It's just a matter of allowing that supply to hit the market at the right time.
Jonathan, but just building on that, India is primarily a country based on thermal power. We are also grappling with coal supply, logistical nightmares, thanks to heavy rainfalls in the parts where coal is mined. Internationally, prices are going up. Any relief in sight? Any triggers that can make the markets believe that this is going to be sorted out sooner than later? Because what you're seeing in Europe and China obviously doesn't bring about any confidence.
Look, you're right, and it is a concern. Higher energy prices are a concern across the board. It is inflationary, and then that allows then for more tightening of policy, which is an issue. When you look at what China is doing, for instance, in the coal space, for instance, Australia is a large supplier of coal, yet China won't import any of Australia. India is a great market now for China for coal. So we are changing, or the market is adapting to meet the demand from those economies that require it. But that doesn't happen overnight. That does take time, and it is slowly starting to happen. But as prices go up, that also increases the ability for more supply to come on the market. The supply is there. It's just a matter of getting it to the market that needs it, and we're going through a transition of changing from the markets that we're used to the new markets that we're supplying.
Just a little macro perspective. And I think our viewers would want to know this. Now, there is always, the one might think that, okay, energy prices are going up, and therefore it's tough time for equity markets. It's going to be a tough time for the economy. And for India, because, India is the second largest energy consumer in Asia. It's one of the largest oil importers in the world. However, when you do the correlation, you see that the equity markets give decent returns when energy prices go up. They actually perform better than the developed markets. Where do you stand when this comes up? So when you have an energy crisis, good news for the equity markets, bad news?
Well, look, I think when you look at the companies that make up the energy sectors, they've had they will get greater return. It's the problem comes into the concern that inflated prices have to be pushed through the economy, which at the end of the day hurts the retail guy. Your inputs, just as a side, when you look at the cost of energy this year, particularly in America, that'll be up by 180%. So those people that burn, that need to stay warm, they've got no choice but to pay these prices. So yes, you get the energy sector surging in the equity markets at the expense of the people, of the consumers. And that to me is a concern, because that then leads to those inflationary pressures, which then add to the fact that money will tighten and then the economies will move into another cycle. And I think that's the main concern. So at the end of the day, yes, those energy sectors will remain relatively well bid. Good returns, which is great because naturally they sell a higher commodity, but it is at the expense of the consumer.
Let's leave it at that for today, Jonathan. It's always a pleasure talking to you. Thanks so much for being so candid when it comes to the commodity markets. You've been talking about the commodity super cycle, but now you've got an energy crisis of sorts. JP Morgan today putting out a report that emerging markets on average have given a return of 19% in equities when energy prices have been climbing up. Watch out for that. Back home, the coal minister as well as the power minister will be meeting with the Prime Minister's office on the looming power crisis. Here's a report by my colleague Vivek Iyer.
Well, even as the entire situation as far as energy supply to various industries and various states are concerned, there have been multiple efforts made by all of the stakeholders to ensure that the situation remains under control. In fact, the PMO is looking to meet the coal ministry as well as the power ministry in order to ensure that there is sufficient coal supply to the thermal power plants. In fact, we understand that both the coal as well as power ministries have sent out assurances to the PMO as well as Amit Shah to ensure and to give them a complete understanding of the entire situation. Now, what exactly has happened is that, number one, this particular time, coal mining has become difficult due to the extended monsoon season, and this has led to a shortage as far as production is concerned. Other than that, what exactly has happened as far as India Electric Utility is concerned, coal stocks at power plants has seen more than the usual seasonal dip as far as the entire coal situation is concerned. On 9th October, however, the coal minister as well as the power minister took a review of the situation, and they did say that the total dispatch of coal was more than what was actually required, which indicates that there is a certain amount of inventory buildup that some of the power companies are taking stock of. Historically, power demand has generally seen a dip in October due to the onset of winters, especially residential demand, and typically domestic coal dispatches have seen an increase beginning of October onwards. Citi, in fact, has gone out and said that the stock of coal has actually bottomed out and should inch up from here on. They also say that they expect the situation to ease further over the coming weeks. In fact, Citi believes that this is a seasonally weak demand period, and which is why, given the fact that we are entering a period of improving coal supplies and a weak demand period, they believe that the power crunch in India may be over soon.
Thanks so much for that, Vivek. Let's certainly hope that that eases out before the winter season here in India. Now, we